Good afternoon, everybody. Welcome back to Markets for Millennials for the weekly wrap of December 13th through the 17th. And this is going to be my last video update of the 2021 calendar year. Just a public service announcement. I'm going to be not posting any content over the next 2 weeks as the holidays are coming up. Next Friday being Christmas Eve, the following Friday being New Year's Eve. But thanks again for watching, and I hope that you and your family have a wonderful holiday, and you can enjoy a time just being together and enjoying the different happenings around the holidays. And so as we get started here, I'm coming at you about an hour after the close of the futures markets and the currency markets, and we'll start off on the DXY because it truly is a dollar story. And so what I'd like to start off with is the FOMC news, which was expected. The committee decided to reduce their asset purchases by $20 billion for treasuries and $10 billion for mortgage-backed securities. And so they give you kind of their running total. So they have increased the taper. That was on Wednesday, which was this daily candle right here, as you see my mouse on the screen. Wednesday the 15th. If you look at the hour chart, what's really interesting is to see the price action that day. Basically, at the release of the press release, the DXY came up real hard, and then basically over the course of the next hour gave back its gains, and then actually ended the hour in the red as Powell was giving his presser, and it continued to sell down through his presser. We got almost 20 hours or so of downward selling. We had about the same amount of time of sideways action. And then over the course of today, the DXY has really just had a huge move up. I mean, over 0.5% is pretty big on the DXY, all things considered. And we've basically gotten back everything that was lost the previous 2 days plus more. So I want to dive into what's going on here as part of this update. Because a lot of people were confused, why was the DXY selling off if the Fed is increasing the taper and looking, according to their dot plot, to raise rates, rate hike 3 times in 2022? And part of the thing that you have to understand is that the markets like certainty, and this was expected. Basically everyone was expecting this to be the case, that the Fed was going to accelerate. The Fed signaled, Powell signaled a few weeks ago when he was testifying, maybe that was last week, but when he testified before Congress, he signaled that they were looking to accelerate. And so the market was expecting it. And I mean, if we just compare to the NASDAQ for a minute, I'll talk about the NASDAQ more fully later. But this move, this green candle, I mean, like the NASDAQ was red on the day until the press conference, and then boom, just an explosion to the upside, going over 2% green on the day. So the markets liked that, and the markets in general liked that, right? And so that's something to keep in mind, and that's why it's really important that, especially in the currency markets, but perhaps even in general, you don't want to set new trades if you're trading the day before, the day of, or even the day after the FOMC media release and press conference. And so we had that day, and then we had this crazy follow through to the downside, or maybe it's not crazy, but we had a pretty decent follow through to the downside. And I do want you to notice the 2 trend lines that we're bouncing from, and I'll talk about those in a second. But where did this follow through come from? And where it came from was the news from the Bank of England, in which they talked about raising, if you look at where my mouse is right here, where they chose to raise their bank rate. And so that provided some steam to where people began selling the U.S. dollar against the British pound. And then the ECB talked about not only reducing their asset purchases under the Pandemic Emergency Purchase Program, or PEP, by the end of March 2022. So the end of Q1 next year, they're going to discontinue this pandemic emergency program. And then their normal asset purchase program, they are tapering that as well, as you could see in this paragraph right here. And so the 2 of the larger, not necessarily the largest, but the euro is the largest weighted against the dollar in the DXY. And then I believe the British pound might be the second or third largest. And so that provided that extra momentum to the downside. And so I think at this point, a lot of people were thinking, oh, the dollar has put up its near-term high. It's going to just start going lower now. And lo and behold, look what happened today. We had this green candle. And there's just a lot going on. And so I want to try to, again, kind of synthesize this all for you. If you were to look up, for example, like some of the things that are going on elsewhere in the world, the Turkish lira is getting destroyed. It has been for a number of months now, but that pace has accelerated and we're going parabolic towards the US dollar against the Turkish lira. I mean, if you go to a monthly chart, I mean, look at that, 40% in November, and we're at 21%, almost 22% in December so far. Just some massive increases of the US dollar versus the Turkish lira. So the lira is getting destroyed. And then on top of that, the Turkish stock market, which had been going parabolic, it has now, like today, after kind of going up even higher, had an 8.5% daily decline. And so that, I mean, this is pretty horrific, honestly, to see what's going on in Turkey. But the reason why I'm bringing that up is there are a lot of people, like Turkey's a G20 nation, and a lot of people are looking at what's going on and wondering if the stage is set for something like what we saw over in March 2020, where we had everybody selling everything looking for dollars. Now, I don't claim to know. I'm not an expert, so don't assume that I'm saying that we're going to get a crash and that the dollar's going to get bid, the dollar's going to go up over 100. I'm not saying that, but you have to be careful and consider the things that are going on, consider the macro picture. I think it's interesting, all things considered, that with the announced rate hike in England, the Bank of England, and the taper in the ECB, given that this is a weighted index, it's amazing to me to see that we gained back all that was lost from the last 2 days. That's just something that I want to take note of. And if you also look to the right side of my screen, all of the major markets, like the equities, except for the Russell, which is interesting, equities were red. The yields were slightly down. Bitcoin, red. I know that Bitcoin's open 24/7, but it's red. Gold down, silver down. These are minuscule amounts to be down, but they're still down. WTI down. So those are things that I want to be aware of. And so I'm wondering, especially because over the next 2 weeks, the liquidity is going to be light. I don't recommend taking new positions if you're trading during this time. But this is a period of time where, because the liquidity is going to be very light, moves to the upside or to the downside are not clear signals, and so you have to be really careful. And it's really, we're really not going to know the general trajectory for things until the beginning of January. And just to, again, to put that in perspective, I mean, look at where we were. If you look at 2020, let's see, let me get all of 2020 in the window here. So 2020, all, from here over to here, right? The dollar was basically down, right? And then if you go now to this year, it's basically been up for the most part, sideways a bit and then up. And so it's hard to know exactly what's going to happen. It may continue to go up or it may go down. We might have a 2022 where the dollar kind of bounces like this and then heads down. I mean, you just don't know. So the best thing to do is to be patient. If you're not already in trades, then don't set anything new. If you are in trades and if they're at break even, or if you still have your original stop loss, then obviously you can hold on to those, and then you have to manage those well. But it's been a dollar story all 2021, and I'm assuming that that's going to be the same thing in 2022. Now, having said all of this, I feel like I think it looks like I've spent almost 10 minutes just talking about the DXY and things relating to that. Let's take a look at yields. Yields have been basically continuing to consolidate sideways in this range that we've basically been in for almost all the year, just like, except maybe from February till now. So almost 11 whole months we've been consolidating sideways. And it's getting tighter in this range. And so we may not see a direction one way or another until 2022, or maybe this is going to turn into just a really long sideways channel. And there's really no way to know. But it's interesting to me, again, on the 15th, if we just zoom in a little bit, on the 15th, the yields were up about 1%. Next day came down almost 3.5%. Today, down 0.5%. So not moving quite in the same way that some of the other parts of the market are moving. Let's take a look at equities because the S&P had yesterday an intraday wick up at a new all-time high, but obviously it came and sold down. So it looks like, and I'm gonna clone this because it looks like we've got a pretty clear resistance line right there. So I want to add that, but I'm going to lighten it up so that it's not dominating. And then I've had this level, which is kind of catching this daily low right here from November 10th. We are below, just debating on whether I want to keep it or not. You see here that I also have had this descending trend line from when we had that sell-off at the end of November. We broke above it and we're kind of back testing it. So I'm going to be watching this trend line in this area because that's also a confluence of trend line support, which I drew going back all the way to the March 2020 low. Go figure, it turns out it connects really nicely to these wicks and this wick, the wicks from October and the wick from December 3rd. So I'm going to watch this area and see if we are able to if we kind of like bounce down here before resuming off. I think if we lose this level, I need to get rid of some of this. If we lose this level, you can see there's a horizontal level there. I'm not sure how good it is right now, but I do want to be aware of it. And if we lose that level, there could be some action. So it may take a couple of weeks for us to really get down here and break this, but yeah, I mean, 2022 could be a lot of fireworks pretty quickly to the upside or to the downside. So I am hesitant right here on the S&P, and I would say probably on the NASDAQ, very similar. I feel very similar. I've got a couple of different things on the NASDAQ. I did, just for the sake of continuity with the S&P, draw a trend line from the March 2020 low connecting these wicks from October. We haven't touched it yet again since October, so I don't know if it's a decent line, but I also added a line from October connecting these wicks, and we're in that range. We did kind of pop below briefly, but we're back above, closed above the line, that's good, closed above the horizontal support, that's good, but we got to be watching where this is going to go. We could stay in this range over the course of the next week, or we could move up or below. One thing that's coming to mind right now as we look at these equity markets is that today, the 17th, was options expiry, and so it's a lot of times you can get this pin in a range as we get closer to options expiration. The triple witching, I think, is what it is. And I think it's triple. It might have, I don't remember if it was one of the other ones, but anyway, a lot of options closing today. So, so that gives us the possibility that we could get some really big moves next week. But again, you have to be really careful because the liquidity is likely going to be lower. In fact, I guarantee you it will be lower over the next 2 weeks. So, I mean, if you look at this this kind of wedge or this triangle pattern that's forming, you know, it goes into like as we get in closer, the more narrow it gets. Right here, you know, is the end of December, and so like we could stay in this range all the way until the end of the year, and you just don't know. Oh, sorry. But I am going to be watching to see if we can get above this this trend line, retest it, and get a resumption candle off of it, or if we break down and then resume down below. So setting up pretty nicely for a very clear directional trade one way or the other. These consolidations, while they can be kind of annoying, they're also very helpful because they help you to establish clear positions. For example, just going back using the NASDAQ, if you had been doing technical analysis, if you, maybe if you trade at like the 8-hour, which is what I and many others in CTM particularly tend to do, if you have that trend line and you get above and you retest and resume, right? This is kind of a light retest. It doesn't always look this way. But if you imagine, that you took a trade on this resumption right there with your stop loss, say right there, I mean, you're still in that trade, right? And then it's up to you to manage your trade properly. So, I mean, like if you consider like maybe you make a trend line, something like that. So maybe you sell there, right? Or maybe it's slightly more shallow and then you're going to sell here. So, I mean, you could just see how, like, even though even though these consolidations can be kind of annoying, they're exactly what you need to set up yourself with good risk management and good trades. And so that if you break down below and then you come up for a retest and resume down, that's a trade you should take, right? With your stop loss either right here or right here if it's to the downside. Or if we break above and retest, then your stop loss is either here or here. And it's very clear risk management and very clear placement of those things. Looking at the Dow, really ugly day today, 1.5% down. Definitely the worst of the equity indices, waiting to get above this trend line. It's not as clear to me on the Dow where the downside line is. As you can see, I've got some faded lines here. It's not entirely clear, and I haven't really been paying as much attention to the Dow. So I'm not entirely certain right here where we should put this line. I mean, it's not clear. You do something like that. Let me darken that up. Maybe that works because you got a touch there, touch there, touch there, touch here. So maybe I'll keep that line there, but it's just not clear. And so I will be watching this spot now to the downside. Watch this area. If we do get selling down here, again, being careful over the last 2 weeks. If we get selling to the downside and then a resumption down, it'll be time to watch out. And the same thing to the upside. So we're getting this on the three main indices. We're getting this consolidation in these triangle patterns. Well, maybe not the S&P, but the NASDAQ and the Dow are getting these triangle patterns taking place. And so it's setting up to be a good place to place a trade. You just have to be patient and wait for the right opportunity. Now looking at the Russell, it's really interesting to see how magical trend lines work. This trend line, this yellow one, has been the downside trend line. And then this white trend line has been topside. We had this little prairie dog above and then sold back down. And look at that, bounced right off the yellow trend line up and then touching it again. Finished the day green, the only equity index to be green, but definitely not out of the woods. As you can see, we've got this downside trend line, this downward trend line. What's concerning about this is to consider, if you just look, we've got this high, and then we have a lower high being made. We've got this low, and then technically speaking, a lower low, although we didn't close lower than this line. So we're going to be watching over the next week or two, again, being careful about the low liquidity, the low volume over the last couple weeks of the year, to see if we make a lower closing low. This is kind of a precarious level all things considered, because we have the horizontal trend line, which is starting to converge with the yellow trend line. And so we're being pinned into a smaller and smaller zone over a long period of time. I mean, like, this sideways consolidation has been here almost all year, just like a couple other things. But then obviously, like, and I was going to say this is clear. I mean, this is one of those things about the markets. It's not always clear. Like, this sets you up for the right, for a, the right risk reward in terms of a trade, but there's no guarantee. I mean, where would you, like, if you took a trade out of this, there was no good place to take the trade because you didn't get an adequate retest and resumption. So, like, and that actually was protecting you, because, like, if you just look at this breakout, so many people are prone to just taking the trade on the breakout, but there was no retest, and so you go up, 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 right? So if you took this trade, for example, let's say you take the trade right there, where do you set your stop loss? Maybe there, maybe there, maybe there, right? And so you take the trade, it's going in your favor, but then we start to come back, and then no matter if you set the trade with the stop loss at any of those levels, you've been stopped out, right? So if you wait for those retests, like, what you should have looked for was something that came back and actually touched the trend line and then resumed off before you took your trade. So this protects you from, getting from taking a loss on a trade that you should never have taken. I mean, because at best, what you would have had is a break-even trade, and at worst, you end up with a loss. And so that's a good learning opportunity to keep in your mind. Russell, I'm a little nervous about, but so far it's holding above all of its important technical levels. Take a look at gold. Gold had a couple of good days. It was really interesting. Let's go back to the 1 hour. On the FOMC announcement, you actually saw gold trade down, and then it traded up, and it traded basically up for the last couple of days until about 5 a.m. this morning. Well, I guess 8 a.m. Eastern time. And then it has come off since. But we are closed above this level at 1794. A lot of other people are looking at 1800 even, saying that that's the level that we should be closing at or above. I don't know that it's necessarily that important that it has to be that even. According to my levels, which I've had these levels for forever, I mean, they're good levels, I think. So it looks okay, I guess, from that standpoint. But gold, I'm still not excited about. And I want to see gold again get up to some higher levels before it becomes more exciting. As far as trades are concerned, silver, kind of the same thing. Luckily, we did come back up into this kind of tight range. Silver being in a precarious position because it's crazy to think, like, we wicked down very similarly to back in September. We wicked down to probably the lowest possible place that we could still have hope that silver stays in the sideways range. Like, our whole sideways range on silver, is what, like this? And so we wicked down kind of below into the danger zone, but have since sold above. And so silver, precarious, and you really got to wait for silver to prove itself. And silver's first real prove it spot is going to be somewhere probably around there. And so I'll be looking at the beginning of 2022 to see if we can start, if we can get to a place where we're a lot better technically on silver. But until then, I'm not holding my breath for it. Also notable, if you look on the right side of my screen and look at gold and then silver, silver is underperforming the last for a little bit. So it's a little concerning in terms of precious metals in general. WTI kind of trapped in this range all week, wicked above and below these trend lines. Oil still looking to recover from this bloodbath that took place over the last couple of weeks. A let's see, if I was doing levels, see if you have something like this, then you've broken above, and this is the retest, which is also at a confluence of trendline support. So possibly on a resumption, you would take that trade. I'm more inclined to maybe do this. Obviously, it's an art; it's not a science. So maybe I'll keep my line there and just see what happens. But definitely, oil still in an uptrend. Oil has not made a lower low from here, from this swing low. So still looking okay. And I think the macro backdrop, in spite of all of the green energy stuff that's going on, the macro backdrop for oil is still good. Demand versus supply and whatnot. So I think you could continue to see oil go up, and I think in 2022 it's going to get up over 90. That's just, to me, I mean, maybe that's a very conservative look compared to some others, but that's kind of where I see things going. And then Bitcoin, don't need to spend a whole lot of time on Bitcoin. I am kind of going back to some old content and looking to really take some time over the next 2 weeks to consider where Bitcoin is and what I think is going to happen. Obviously, we're not going to see a blow off in December. I might have said that in my last video. So we're looking at, sometime in Q1 is the next kind of range of time to be looking for a peak. We're in a precarious spot where a lot of people are looking at the consolidation from over here and wondering if we're going to get the same thing happening over here. Nothing's really certain. But every time we've been getting some solid moves to the upside, the move has been faded. We've had a lot of pretty awful Fridays that have taken place over the last few weeks. And so those are things that you want to be aware of. Like if you just look at this level, so I've got a couple of different things I'm watching. I've got this trend line, which is connecting the April 14th peak to the September wave 1 peak. And so I'm wondering if we are going to kind of bounce around and settle around this level before resuming up. I've also got this wedge, which the yellow line here, which is the bottom of which is now providing resistance. It looks like we're closing below where I originally had this trend line, so I'm going to move this trend line to connect the bottom of the red wick here. And it looks like if today we close in the next 32 minutes, if we close below this, then I'm going to move this trend line down, and I'll have to obviously readjust my models for where I'm looking for a peak. And so there's just a lot to cover in Bitcoin. There's way too much for me to cover in the time that I have, and to be able to keep this a reasonable length video. We're already getting close to 30 minutes, so I'm just going to cut it off there. Long term, I mean, all you got to do is, forgive my lines, but all you got to do is pull back and look at the long-term picture and see that it's bullish, and I mean, what are you going to do? Like, Bitcoin is bullish. And it's pretty amazing to think, considering all the FUD, it's pretty amazing to think that in 2021, just in spite of all of the things that have been going on, Bitcoin is still up. So, I mean, what else do we have to say? If we go, let's see, up, well, according on this chart, 44.5%. So, all things considered, still good. Maybe not where we wanted it to be, and that's the thing. The markets are going to be the markets, and they're going to surprise you. And they're often not going to do what you want them to, or in the time that you want them to do them. So always have to be flexible and willing to adjust, being fluid, considering as many vantage points as possible, and not being married to any thesis. And then obviously manage your risk properly, and that's really all anybody could do. So that's going to be it for today and for this week and for 2021. So thank you for watching this year. Thank you for those of you who have subscribed. We look forward to what 2022 has to offer and what we're going to be able to accomplish and put together during that year. Thanks for watching, and I will see you guys in a few weeks.